So it's absolutely crazy, but this is happening, and I didn't want to do a show today because, as you see, I'm traveling, I'm on a conference, but I can't go without this. So I thought I'm going to do a pre-record for you guys because, first of all, it's absolutely crazy. Second, I do think this is some kind of overreaction, and I do think that there are a lot of levels certain levels that you have to look for to confirm if we are really going to see a nosedive. Now, yesterday I did a show, and on that show I said the bottom is in, both the local bottom and the ultimate bottom. And I will talk about those levels as well, and I do stand by it. And none of the levels I described were broken, so we're still within the range, but we really need to see a performance here and decide whether this is an overreaction or not. Now, if you have not followed what is really happening, basically what's happening is that the CPI reading came in higher. Now, everybody was expecting the CPI to come in at or below expectation, except Goldman Sachs, Citi, and UBS, and Deutsche Bank, right? But in general, the general expectation was that we are going to get a CPI within expectations. Now, that's not what happens. As you see here, core CPI came in at 0.4 instead of the 0.3 expectation or forecast. CPI on month-to-month came in at 0.5% as opposed to the 0.3% expectations. And the CPI in year-to-year came in at 0.1% higher at 3% instead of the 2.9. Now, I do think that the market is overreacting here. I do think that this is, of course, is it bad? Yes. Is it higher than it should be? Yes. Higher inflation means there will be no rate cuts, or rate cuts will come later, which I'm going to talk about in a second, how later they're already pricing in for December. But ultimately, we knew that Trump is coming into office, and we knew that Trump is all for, economy and boom, and all that is resulting in inflation. And if you look at this and you actually understand that year-to-year CPI goes up to 3%, which is, yes, this is the highest inflation we had for a long time in the United States, and you understand this 0.5% on the month-to-month, sure, but it was expected. I don't think that this is something that we were like, oh no shit, really inflation is going higher with Trump coming in and there's, pouring money into the economy. It was expected. And Trump has made statements that the rates has to come down, so we had to see. But I feel you all. So as inflation comes in higher, this is what I can really relate to. I don't know if you know this meme, this guy, but it's like, freaking hell, it's exhausting. It's difficult. It's looking at the chart, you're trading something, you have a perfect setup, and this thing comes in and it ruins everything. I know how horrible it is. I understand. So let's look at some stuff. One is traders shift their next rate cut. So the next rate cut that we've been talking whether it's going to happen now or it's going to happen in September. Now there was one rate cut priced in, then we're moving a little bit towards 2 rate cuts this year, and now it's probably one rate cut, and even that is going to come at the end of the year. First of all, I personally don't think that is going to happen because people underestimate the impact Trump will have on the whole situation. He's publicly going out and saying rates has to come down, and I'm pretty confident that he will manage to do that. But that's another discussion. But now the market is pricing in a rate cut in December. Why is that a problem? We talked a lot about this on the show, and I also tweeted a lot about it. If there is high inflation, that means that rates have to remain high because that's how they tame inflation. They need to cool the markets off. They need to suck liquidity out of the market. If they see inflation coming down and they can start quantitative easing and they can start easing the monetary policy, that means that it will be cheap. They will reduce rates. It will be cheaper to borrow money. And because it's cheaper, the economy will boom much more. But again, Trump is coming in and he's going to inject in different avenues a lot of money into the market. And we're going to save a lot of money as well from government spending. And what they're saying, inflation is going to be 0%. This again, it's obviously we can have a discussion whether that's true or not. But as Elon Trump is saying, inflation is coming from, undocumented or over government overspending, basically. That's another discussion. What is important is that this is the moment where we can really see what is going to happen. So if the timeline is so freaking bearish at Bitcoin at 94,000, it's hurtful to watch. But if Bitcoin still needs to correct and the market still needs to correct, it has to happen now. Because it's bad news, because we didn't see this inflation for a long time. Powell speaking today. If we do not go below 90,000, and that's not the level that I personally look at, but if we don't dip below 90,000, I do think that the market is going to hold. Now let's look at some levels, and I do think that there is a likelihood of a bounce, which you already see here. Now, this is a pre-record, so you might see a few hours later this published, probably You see it about an hour after I recorded this. So this might change until then, but I want to give you my levels. First of all, I told you yesterday that the bottom is in. Reason is very, very simple. We do have a beautiful 50% retrace after a massive, massive push, consolidation, liquidation into the 50%, and then a higher high formed here, which you can see. Now, once you see a higher high, that indicates that the retrace that we saw is finished, and the bottom down here should be in at 3.03. And I even tweeted about it. Let me just go into my Twitter. I even tweeted about it, and then I said that, first of all, guys, also thank you very much for the 45,000 followers. It's insane. Woo! We're here. I'm very happy to see these 45,000 people. Absolutely insane. But if you're not following me on X, you're actually missing out. So there's a link in the description. Do that. And I tweeted about this, and I said that 3.03 trillion is the bottom that has to hold on the total. If that doesn't hold, we're going lower and potentially much, much lower. So I want to show you why I mean that. So here on the local level, this should be the local bottom, right? 3.03. Now, because of all the macro factors that we saw, this is literally the CPI reading, market dumped like 3%, and you saw what happened really on bubbles as well. You see the charts go absolutely banana, like Ethena down 10%, Tau down 10%, Gala down like 6%, Stellar down 5%, Litecoin down 9%, HBAR 8%, this is QNT down 7%. So you see like these major, Near 5, Link 5, IOTA 7, Ton 3, and it's not that bad. Render down 6, so Radium down 10%. Like, what is really happening here? Okay, so what is important to understand is that when you see this happen, you have to evaluate what levels you have to look for. Okay, let me round everything up here. One is 3.03. 3.03, that's the local low from the retrace. We had the retrace on a higher time frame to the 50%. We recovered with a higher high on the hourly chart, a beautiful V-shaped recovery. We retraced 50%, and now we are still within the range. This is our range, and I told you yesterday that we are going to get a retrace back to the 3.09-ish region. I didn't expect that it was going to happen because of the CPI reading, but we did get that. Technically, we're still within this range until we break and close below the 3.03 trillion mark on the 1 hour chart. We are extremely, extremely bullish, and you should be loading up on positions. If we close below the 3.03 trillion mark on the hourly chart, we have a problem. Why? Because that means that we continue our descent on this higher time frame range between 2.81 trillion and 3.32 trillion. Now, very important. I do think the bottom is in here at 2.82 trillion. And what can happen that is impacted by, or affected by the macro factors is that this here could be a fake out, a rally and a higher high that was driven by TA and was driven by fundamentals that basically got screwed over with these CPI reports, and especially if JP says something stupid today, that will have a massive, massive impact on this. So on a higher time frame, we're still extremely bullish. The bottom, the ultimate bottom, I do believe is 2.81 trillion. I do not think we are going to lower there. Can we retrace a little bit lower here and still wait for another higher high on the hourly chart? Unfortunately, yes. And I know it's tiring, but this is how it is. As a summary, here's what you should look for. If we close below the 3.03 trillion mark on the 1 hour chart and we do not see a recovery, unfortunately, I'm going to cut my positions in a loss again. And I'm not happy about this, but I will do it. Why? Because we can see another, what can this be? Another 5 to 10% on total, which can be 10, 15, 20% of some of the major coins drop down here. And I will wait for another higher high form. If, however, we are able to sustain this level, which is really what I want to see, if we're able, because inflation is not that bad, I do think obviously it's not great, but it was expected. Trump is coming in, Trump is pumping the economy, that will cause inflation. Month to month is high, yes, again, because of Trump, if executive orders, the things that are happening, but also in year at 3%, which is, again, obviously the highest, and it seems like the trajectory the Fed is doing is not working. I don't think it's that bad as the market is reacting now. So what I do want to see is a close back above the 3.15 trillion. If we can get that, damn, that would be like an insane confirmation that we're going to continue our trajectory up and that we completed the pullback. This would be a very good retrace, and then we go higher and higher to the 3.45 trillion. If we fail to do that and we close below the 3.03 trillion first on the 1 hour chart, unfortunately, to sell, and we got to reevaluate. What I'm going to look for lower is going to be a 1 hour higher high. As the same way I described this here, you print lower lows and lower highs. Now we have potentially have a fake out here. That happens. What I really want to see is another. I'm just going to mark it for you. I'm probably going to tweet all this. So if there is anything happening, this is why it's worth following me on Twitter and making sure that I do have that you do have notifications on. I'm going to keep you posted. But technically what I'm looking for is a higher high. Guys, first of all, I know it's difficult. I know it's exhausting. I know a lot of you feel like, screw this thing and I want to leave it. But I promise you, this is the reason why you have to stay on track. Obviously, you need to apply proper risk management. You need to pay much more attention on how do you handle the market right now. It's best to sit out, but if you want to participate, these are the levels that I would recommend you look for. And I also wanted to tell you that about a great deal that we have with VX. VX is an exchange that I partnered up with. You can get a 0% maker fee. That means that if you trade with limit orders, you trade basically for free. On the exchange, you have sign-up bonuses and much more. They're non-KYC available worldwide. Go and check them out. The reason why it's also good to bring them here is because legit, when you put limit orders expecting a massive dump, it costs you money to actually do that. If you trade on VX, there's a link in the description. If you use my link, there is no fee on limit orders. Okay, guys, I know it's exhausting, and I'm coming here with you with this short update. I'm going to try to do another one tomorrow. I'm at NFT Paris. Yeah, I just want to tell you to hang on there. I know it's difficult. I'm going to update you on everything I do on X, whether it's a breakdown or whether it's, a break above or break upside. I want it to be an upside break. I wanted to hold the structure, but I'm not a fortune teller. I'm a trader and we react to the market. This is all we can do. If you enjoy this content and appreciate that I'm still here and doing this for you on an emergency basis, please smash and obliterate the like button. Let me know in the chat. I'm going to reply to every single comment below. And yeah, just stay safe out there, right? You can check these 2 videos out there on the channel as well. You can click here to subscribe. Obviously, please like the show. And tomorrow, I'm going to be back with another one. Thank you so much for watching. Truly appreciate you. And I believe I'll see you in the next one. Take care.